Welcome to the speaker series. Before we get started, I just want to take a moment to remind everyone what the speaker series is all about. Our mission is to bring inspiring ideas and innovative thinkers to our employees and to our members to make them more productive and successful. You can always check out past speakers at speakers.linkedin.com. And we also have a channel on iTunes, so you can download them for your commute and listen to them then. So I run the speaker series at LinkedIn, and I also run our LinkedIn Alumni Network. So today is the perfect intersection of my worlds here in that we get to host our very first LinkedIn alum as a part of our speaker series. Very excited about that. And actually, who knows that we have an alumni network at LinkedIn, alumni group? That's great, awesome. Yeah, so when you leave LinkedIn, you'll get an invitation to join the group. And when you join the group, there's some great benefits to doing that. You get a free upgraded subscription to LinkedIn for a few years. And you get invited to events like these. We have a couple of alums in the audience. Leela, Brooke's on her way. I know there's some others. And other free learning and development opportunities, et cetera. Basically, we'll keep you in the fold when you're on to your next play. So today, I'm very excited, as I said, to host our first LinkedIn alum, Matt Kohler. He was a founding member of the LinkedIn team from 2003 to 2005. Then he was also there at the beginning of Facebook. So very, very lucky guy. And he's gone on to be an incredibly successful venture capitalist. He's a general partner at Benchmark now. He helped land companies like Uber, Snapchat. I could really go on, probably for the whole hour talking about his accomplishments, but instead of that, I'd like to welcome him to the stage. I think that'd be a better use of time. So I'd like to welcome him back to LinkedIn, Matt Kohler, and then also hosting him today is Reid Hoffman, man who needs no introduction. Let's welcome them to the stage.
Music. This is getting more highly produced. Well done. I thought I would start with my perspective of how Matt and I met, and then ask Matt his perspective, which was probably not exactly the same thing. Actually, one of Matt's and mine both favorite films, if you haven't seen it, is a Kurosawa film called Rashomon, and we will have probably a very slight version of this Kurosawa effect. I recommend it to you. It's a kind of a classic. Anyway, so my perspective was I was in the process of, I'd started a company called Socialnut. I had been part of the founding team of PayPal, and I was starting this other company. And one of my very good friends, a woman who actually worked at LinkedIn briefly, much later, Tara Terwilliger, who was at that time working at McKinsey, said, I know the smartest person at McKinsey. And I was like, well, that's interesting. And he's young, and he's interested in startups. And I was like, oh, all right. He's like, you should meet him. I'm like, oh, okay. Right. And so then Tara put us in touch. And one of the things, I hadn't had this language at that time, I think our first lunch was at the Mandarin Gourmet in Palo Alto. Wow. Right. Which is not there anymore. It's now a new restaurant that's funded by Chamath, of all people. Yes. Jeff Weiner, actually, I think, is one of the financiers. There's a whole crew of people who was financing that restaurant in Palo Alto, which I'm now blocking on the name. Bird Dog, thank you. Network intelligence at work. And what I had learned about Matt was that he was actually, in fact, already leading the startup review life. He had stopped out of college and gone to Asia because he thought that was more relevant. Actually, as part of your intro, we'll go into more details of that. And was thinking pretty seriously about venture capital. And the key piece of advice that I gave him, which I think turned out to be true, right, was go work at compelling companies as a way to get into an interesting venture capital job, because we won't name the firms that had been trying to recruit Matt at the time, since that's impolite in front of the camera, right? And then it was like, oh, come work at LinkedIn, and so we tried, and this LinkedIn thing is interesting, and then we did a tour of duty again. Later language that was generated for the thing, and then onward. So what was your
Yeah.
What was your other side of this, Rashomon?
So first of all, thank you so much for having me here. You know, I've had a ridiculously lucky life and career, and in that ridiculously lucky life and career, there is nothing that I'm more grateful for having been a very small, ephemeral part of this company, and as important as anything, for having gotten to know Reed and having had the chance to work with and learn from Reed and have a friendship with Reed. It's been one of the most important things, probably like counted on a single hand in my entire life. So thank you. So my perspective on it, there's this saying from Bill Gross, Bill Gross, the great bond investor, not Bill Gross, the Los Angeles internet entrepreneur, also a very interesting guy, but different. There's the saying from Bill Gross, who's one of the most successful investors of all time, that success requires you to be both contrarian and right. And if you were working, a lot of people in Silicon Valley worship at the altar of being contrarian. That's actually only half the story. You have to be both contrarian and right, as he pointed out, very wisely. And if you were in Silicon Valley in 2001, 2002, 2003, and you cared about the internet, and you cared about the consumer internet, whether you knew it or not, you were contrarian and right. Because at that moment in time, there were very few people who cared about the internet in Silicon Valley. As odd as that may sound, VCs only wanted to fund enterprise. There was this expression going around, B2B means back to banking, and B2C means back to consulting. This was an old joke, which is lost on us now, but may yet return in the years ahead, which we can come back to. There were just very few people who cared about internet startups. And I was trying to meander my way through the early years of a career. And as Reed said, I kind of had this idea in mind that I wanted to do venture because I'm not an entrepreneur. I'm not a very good manager. I'm not a great executive. I'm not very strong technically. But I love startups, and I loved working with startups. And so I kind of felt like, well, if I can't do any of those things, I guess I should probably be a venture capitalist. But the question is, okay, well, how do you get there? And as Reed spoke to a moment ago, like he gave me great counsel on how to think about that and how to get there. But in 2002, so I moved out here in 01. We're jumping ahead a little bit, but
go ahead. No.
I moved out here in 01, which, as it turned out, was just the perfect time to move out to Silicon Valley. And I wish I could say it was some conscious act of genius and insight and contrarian wisdom. I just didn't know any better. I was just naive. I wanted to be here. I believed in the internet. I believed in the consumer internet and internet startups. I'd worked in some of that in the past, which we can come back to. And at that point in time, there weren't a lot of startups in 2001, 2002. And so the only job I could get out here was at McKinsey in Palo Alto. And they hired me. I was fortunate enough to get the chance to work there. And the interesting thing about being there in 2001, 2002, it goes back to this thing about being contrarian and right. The people in the office with me, right down the hall from me was a guy named Sundar who went on to run this company named Google that you may know of. Wonderful guy.
Just down the street.
Yeah, exactly. They just shared a parking lot or something. Sheryl Sandberg moved out here in 2001 as well, and of course joined Google shortly after that. So it was a really good time to move out to the Valley. That being said, I don't have any of those skills, so I was trying to figure out, well, what's the best thing to do, to eventually get into venture? And I started to interview at all these venture firms. And it was a really kind of, dark moment for me, because as I started to have these conversations, had huge respect for the people and the firms, but I thought, wait a minute, I don't want to do this. Like this job, and the jobs I was interviewing for at that point, I had to know anything. So this was a kind of entry-level job. And it didn't feel that different from the work I'd been doing at McKinsey. It was very far removed from the work that a general partner does in a venture firm. And it's important, but it didn't really speak to me. I learned a lot at McKinsey, but I knew that wasn't really the right environment for me either. I didn't want to go to business school. So I was kind of in this moment of crisis of what am I going to do with myself? I don't know how to start a company. I don't want to go work for one of these venture firms. I don't want to go to business school. Maybe I should just go back to music, which is the kind of other track in my life, which we can come back to, and just do that in some way, because I don't know what to do. And I was very, very lucky that a friend of mine, also down the hall from me at McKinsey in 01 and 02, was this woman, Tara Terwilliger, who Reed just mentioned. And she just said to me, I kind of commiserated with her about, what do I do from here and what's the best path? And she said, you should just meet my friend Reid Hoffman. I'll bet you guys would hit it off. And so I said, yeah, sure, great, I'd love to meet him. And, to put it in context, Reid Hoffman in 2001, was every bit the amazing individual that he is today, but it was not like Reid Hoffman. People always ask me, how did you get this job? Like as this idiot, 18 months out of McKinsey, with no skills or qualifications, how do you get this job as like Reid Hoffman's like apprentice and lieutenant and right-hand person? Like, what a dream job. I'm like, yeah, I know it was a dream job, but the thing is like nobody else wanted it at the time because like, there were literally like 30 people, who were trying to do those kinds of things in all of Silicon Valley. Today, there'd be a line from here to San Francisco, for that job. So I was just really lucky that it was that moment in time, and there just weren't that many of us who cared about this stuff. So I met Reid, and the first meeting I remember after that lunch was at Hobie's on El Camino in Embarcadero or something. And the thing that stood out for me for these meetings with Reid was they just kept running really long. And that's always a good sign. Like when you have a 30 or 60-minute meeting set up with someone, and you're on like hour 3, and you're like, okay, like I gotta go, but and you want to keep having that conversation. And I just got, every time I spent time with Reid, I came away from it emotionally exhilarated, and that hadn't been true of anything in my working life until that point. And the decision that I was trying to kind of muddle through was, well, rationally, it probably makes the most sense to go do this venture capital thing because who knows, this random guy, Reid Hoffman, and like this consumer internet stuff it's not really clear yet. Reid hadn't launched LinkedIn yet. He had the business plan and it was underway, but it hadn't launched.
The first 13 people.
Yeah, that's right. That's right. Exactly. And ultimately, I think I was very fortunate in that I listened to my heart on that. And it was no contest whatsoever. Every moment that I spent with Reid was exhilarating, and I wanted more. And I was like, God, I can learn so much from this guy. He knows everyone in this ecosystem, so I'm going to build, a network in this ecosystem. And I just love being around him and talking to him and helping him and learning from him. So why would I do anything but that? And LinkedIn launched on May 5th, 2003, a couple months after we started, 3-4 months after we started working together. And that was that.
Actually, I'll come back to a question of what your early perspective of LinkedIn is, but one of the things that your conversation reminded me of, which I'd forgotten, is one of the pieces of advice that I give entrepreneurs now directly comes from my experience with you and Lee Hauer, which was when you're doing part of an early founding team, have very strong generalists, right? Because, yes, no technical skills, yes, no particular experience, but fast learner, willing to tackle foggy minefield problems. Like, sure, I'll go figure out how to do a sublease of a building. I've never done that before, but I'll figure it out. That kind of thing is actually pretty instrumental to hitting a lot of the, avoiding a lot of the landmines that actually can otherwise really delay early companies, and delay speed is an essential thing, and so delays are potentially deathly. And actually, in fact, you're one of the examples, and actually I think you're one of the very few people who's mentioned in both books, as I actually now recall. So what was your perspective of LinkedIn? Because as I recall, I think you were somewhat tolerant of my, this could be big, but you're like, yeah, sure. You're like, working with you is fun, and maybe this thing will go somewhere, who knows? Right. But what was your early perspective?
That's probably about right. And I think there's some truth to that, which is important for startups and thinking about startups. I don't know how many people in the room are investors or thinking about being an investor someday or a venture investor someday. There's nothing as important in making a startup bet, unless you're a founder. If you're joining a startup or if you're investing in a startup and trying to decide, is this something I should bet on with my time or my money or both, there is nothing as important as the entrepreneur and the person, always. And so, that's a trump card, of all trump cards. I had such conviction around you that it kind of trumped everything else for me. The thing that was just not clear to me about LinkedIn was, the first time you described it to me, which was probably in late 2002, I think it was late 2002, I thought that could, if that worked, that would be amazing. But how do you get it from here to there? And I sort of had this instinct, which I think I still do, rightly or wrongly, that it's very hard to kind of execute your way to success in a consumer internet product and business, because they tend to have this attribute of almost being sort of like an invention. And it's sort of like the way the public tends to think about businesses. Like my mom will say something like, I wonder how they thought of Microsoft. It's like, well, it doesn't really work like that. That's sort of the popular consciousness for things. There's actually kind of a kernel of truth to that for a lot of successful internet products. If you think about something like, most of the ones that have been great and successful, from Instagram to Facebook to Snapchat to Tinder to you name it, ones that I've had the good fortune to be involved with, they sort of have that initial spark, which you can't really manufacture and is really hard to produce. I think it turns out there's an extraordinarily rare group of people, maybe a handful of people in the world, who actually kind of can manufacture it. And the two that come to mind for me are you and Rich Barton, who kind of executed his way to Expedia and Zillow and Glassdoor. But that's very rare. And so it wasn't a conviction that LinkedIn wasn't a good idea. It was a conviction that I couldn't predict the future and didn't have a crystal ball. And if it could work, awesome. But how do we get it from here to there? And I think one of the classic mistakes that entrepreneurs make is to imagine the end state and get excited about the end state, without the intuition around, okay, that's great someday. How do I get from here to there? And what are the many steps and, kind of bootstrapping your way through different phases of growth that have to happen to get us from here to there? Because some things you just can't get from here to there. So that was the optimistic skepticism on the idea of LinkedIn, but the complete conviction and passion in you, and the complete conviction that if LinkedIn could be what it has now become, that would be enormous, which of course it now is.
Yeah. What? Now it's been about a decade since you actually worked here, and you were in the very first office, which was actually down the street. Not a building we have anymore. What would, if you were to call your younger self and kind of say, here's something that I should do differently, or LinkedIn should do differently, or double down on, avoid, what would be the advice to your younger self?
It's a great question. From the LinkedIn perspective, I think that LinkedIn, it's worked, and it continues to work really well. So it's easy to say, oh, we should have done this thing slightly differently or that thing slightly differently. But I think it's hard to find fault with how things played out at LinkedIn. You can always look at things and do little things better. I think for myself, I had the opportunity to play a very small role in product stuff early on, which you were kind enough to give me, undeservedly. And I don't think I approached that in the right way. I think I approached it too kind of analytically and top down, and not creatively and organically enough. And I regret not having had the opportunity to have played a more meaningful part in the product, the creative part of product at LinkedIn. Because I think it, again, like for LinkedIn, it didn't matter in the least, but for me, selfishly, it would have been, a joy to have been more deeply involved.
Yeah, it's the central part of the strategy, as for consumer internet companies.
Yeah, one of the many, many things I've learned from you.
All right, so shifting to investing. So how do you approach the job of an investor now? So now you went through LinkedIn, you went through Facebook, joined Benchmark, which is one of the stellar firms, right? How do you think about investing? Because this is something that.
So people always ask me this question, what's it been like to go from being an operator at LinkedIn and Facebook to being a venture investor? Like, that must be a really difficult transition. And what I always say is, well, actually, it kind of wasn't a transition for me, because, to your point, and as we were talking about before, I'm not an entrepreneur, I'm not a founder, I'm not a great operator or manager or executive. I joined both LinkedIn and Facebook after angel financing, but before venture financing. So kind of my now partner at Benchmark, Peter Fenton, who at the time was a partner at Excel, always used to call me the Series A investor in LinkedIn and Facebook, which was kind of, spiritually there was some spiritual reality to that, just from the perspective of both the timing and what I did, just doing this generalist stuff.
But by the way, one of the funny, I don't know if this is actually reported, but one of the funny stories about Excel's investment in Facebook was Peter calling me saying, my partner Kevin Afrusi is trying to get Facebook to return their phone calls. He's not. Can you get them to meet with him? And me calling you saying, hey, good,
totally.
Can you make this meeting happen?
Again, the ecosystem, the network at work is always. So it hasn't been a huge shift for me, and I try to approach investing, venture investing, in the same way that I approach the work at LinkedIn and Facebook. Look for the same attributes. Some people think that the job of a venture investor, and some venture investors think that the job of a venture investor is to be sort of a futurist and to have these grand visions of where the world is going in 5 years. Of course, I have thoughts on where the world's going. We'll have to talk about that. But I don't believe I have a crystal ball. My partners and I tend to look much more for specific attributes, bottom up, that we think are really important. And when enough of those things are present, we pursue a company and try to win the right to be a part of that company. But it's very kind of bottom up and organic and based on attributes rather than top down theses writ large. So it hasn't been a huge shift for me because that's kind of how I was, whether consciously or subconsciously, approaching the decision to go work for you, and then the decision to go work for Mark at the Facebook, and then Facebook.
It was the Facebook.
It was the Facebook then. And I think the thing that's been most challenging about, a lot of things have been challenging about it. And first of all, sitting on the other side of the table from venture, the job looks really easy. At least it did to me. I met with most of the venture firms in Silicon Valley when I was at LinkedIn and Facebook, because one of the things I did was to help Reed and Mark with financing rounds. I was what I like to call a spacebar guy in those meetings. if you've ever been in a meeting like that, there's someone sitting there pressing the spacebar.
That's understating it.
I drew some charts, too.
Like this, the Series B deck. Actually, that was the thing you and I did together. And by the way, we can come back to it. But this, the Series B deck. Seeing that online, which you were kind enough to put it online, and it's amazing to me the prescience and foresight with which you had almost the entire thing mapped out, like a decade, and unbelievable. If anybody in this room hasn't read this, by the way, it's online. It's the entire pitch deck for the Series B round that we did, the round that was ultimately led by Greylock. And it maps out like almost everything that has happened here in the following 10 years. A couple of things that weren't there, which would be interesting to talk about, but a lot of things that were. But at any rate, the job looked easy, from the perspective of raising money. One thing that I've learned is it is a really hard job. Let me put it differently. It's not a hard job to exist in and survive in. It's a very cushy, comfy, float on a cushion of air job to exist and survive in. It's a really hard job to do well because there's some really smart, hardworking, competitive people trying to do the job, and there's more of those than there are extraordinary opportunities. And so it kicks your butt, or at least kicks my butt, every single day, which is the most important thing about it, and the thing that from which constant energy comes for me. It's been an application of, maybe more consciously, an application of the same principles that I think I was sort of subconsciously making the decision to go work for you and then go work for Mark on. And we could talk about what those things are, but they're pretty straightforward. Well, one thing though, it's kind of an interesting thing is, it's very hard to identify the contrarian and right. It's very hard to identify, well, these are the specific things I'm looking for, because you're actually looking for something boldly different.
Right, that's right. You're looking for an exception, not something that conforms to a rule.
Yes.
Right.
But another way of kind of answering the, how do you invest question is, what are the patterns that you actually see a lot of that you don't invest in?
Sure.
Right, is kind of a useful thing for people to think about entrepreneurship.
So I'll speak a little bit to the patterns that I do get excited about and the patterns that I don't get excited about. So the patterns that I do get excited about, just to start there. So again, the number one most important thing is a great entrepreneur. Every investor you talk to will say that. So the deeper question is, what makes someone a great entrepreneur? And we can come back to that, but just to go through it breadth first. Or do you want to?
Yes.
Yeah, let's go through it breadth first. So a great entrepreneur, a distribution strategy for a product which you believe works and is going to continue to work even if with adjustment. I think people systematically undervalue how hard and important it is to actually get distribution for a product. That's one of the other many things that I kind of learned from you that you drilled into my soul is, distribution. And then a product model or business model which creates some kind of a durable competitive advantage is incredibly important. And then lastly, putting all those three things together and saying, okay, well, if we have a great entrepreneur, we have an advantaged means of distribution, and we have a product and business model that creates some kind of a durable competitive advantage, what is that potentially going to make possible here? And how does this product, in the intersection of the market that it's serving, how does it grow or change or reshape the market that it's in? That's the part where you just have to imagine, where things might go in the future. And that's a good, segue to what I sort of don't look for in investments. So a couple things that may sound funny to hear from an investor, but a lot of entrepreneurs talk about big markets. And I actually, if anything, I think a big market is a little bit of a red flag, because if something's already a big market, it's probably going to be really hard for you, as this little, underfed startup to get into any sort of position of strength in that big market. You're going to be one of a bunch of fish swimming in this giant ocean. There's probably some sharks and boats there too. And, it's going to be, maybe you can survive, but it's going to be very hard to thrive. So I actually much prefer things that currently look like small markets that you can look at and say, imagine. Imagine if the intersection of this entrepreneur and this company and this product and this business and this model, imagine what that could do to change this market. I think, a textbook case from the generation that we're in right now is Uber, where, early on, we were very fortunate to lead the Series A in Uber at Benchmark. And early on, a lot of people looked at Uber and said, well, how big can that be? That's the taxis, maybe taxis and limos. Okay, that's nice. Maybe they get some percentage of that. Well, we all know what's happened with Uber. It's radically changed and reshaped and grown the way people think about transportation, along with a lot of other things. And so that's the sort of opportunity where if you can imagine a future where you've grown and reshaped and changed a market, that's more exciting to me by far than a big market. Second thing that I don't necessarily look for is big revenue numbers or big, top of the funnel usage numbers. I think what matters much more in the early years is not how many people appear to be using something or how fast does it seem to be growing, but how. Of course, growth matters. Don't get me wrong; it's critically important. But how deeply engaged are people with the product? Do they keep coming back or not? Is their usage of it increasing over time? To the extent there is revenue at an early stage of the business, how's that happening? There's lots of companies, especially in an environment like the one we're in 2015, where entrepreneurs are building businesses and venture investors are funding businesses which are, spending $1 to create 50 cents in revenue. Or even spending $1 to create 80 cents in revenue. And that's okay temporarily, as long as you've got conviction that there's a upward trajectory well out of that. Mm-hmm. But a lot of the businesses you see out there, they may be amazing consumer experiences, and some of them are, but in some cases they're amazing consumer experiences because they're kind of too good to be true, and they actually are too good to be true. And so I think especially in an environment like this, you've got to be very mindful of how durable, the business and the business model and the product model are. The entrepreneur, the background of the entrepreneur, that's a whole other topic we can talk about. I don't necessarily look for people who are first timers or for people who've been successful before. I think there's a set of attributes that you want to look for and avoid in entrepreneurs. But I'd say those are the main things that get me excited and that get me concerned.
So you mentioned environment.
Yeah.
Your partner, Bill Gurley, relatively recently made a comment that we're going to see a lot of dead unicorns. Do you think we're in a bubble? What do you think about the herd of dead unicorns?
So we're definitely in an environment where certain segments of the capital markets are pricing things to perfection and are pricing things to the presumption of an absence of risk. And reality is usually different than that. There probably isn't perfection in any of these things, and there probably is more risk in things than people think there is. What's really interesting and puzzling about the current capital market reality is, unlike in the fabled .com telecom bubble era of the late 90s, the public stock markets today are behaving in a very, rational, reasonable way. Companies like LinkedIn, have huge market caps, but they're not, those companies, the market caps, if you look at the fundamentals of the business, it's reasonable, actually. And so the public markets in general are behaving pretty rationally and reasonably. What's puzzling is the late stage private markets are the part of the markets that are pricing everything to perfection and pricing things in a way that assume very little risk. Why that's happening is a whole hour-long discussion in and of itself. It is what it is. I think the question is, what do you do about it if you're an entrepreneur, and how do you think about it from the perspective of, what is the future of your company, or is probably more relevant to the people in this audience, to their own futures over the next 5 or 10 years. Again, I don't have a crystal ball. I don't know where things are going and when. I can say with a fair degree of conviction that this is and has always been a cyclical market that we all live in. And we have been through a phenomenal upswing in that cycle, again, for reasons that we could spend an hour talking about. It is certain to turn at some point. And when it does, the environment is going to look a little bit more like the environment of 2008 and 2009, or the environment of 2001 and 2002, than the environment that we're in right now. Now, interestingly enough, I think that's as much good news in some ways as it is bad news, because the best companies will still thrive in that environment, and the best new startups might thrive even more in that kind of environment.
And will thrive even more.
Probably, yeah. LinkedIn started in one of those environments. The Facebook started in one of those environments. Uber started in one of those environments. Airbnb started in one of those environments. And today, it's a very challenging time to put a stake in the ground on anything in the startup world, simply because there's just, there's so much capital, and that's actually not an ideal kind of state of equilibrium. So it's coming. I don't know if it's coming tomorrow or coming in 5 years, and I wouldn't advise anybody to radically modulate their behavior on the basis of some crystal ball prediction around that. What I do think is, in an environment like this one, if you're joining a company, whether small or big, it's critically important to ask the question, I want to just go through the thought exercise of saying, let's assume this company could never raise a single penny again, ever, in the private markets. And its only additional source of capital was post-IPO and post-IPO in the much broader, bigger public markets that are more durable. What would happen to this company and this business? And if you don't like the answer to that question, I'd unpeel a little bit further to make sure you have real conviction on the other attributes of the business, because that's the environment that at some point in the relatively near future we're likely to be headed back into.
The only, one of the things, actually I haven't done a post on this, so I've thought about it. The only generally true prediction of the future is that predictions of the future are false.
Sure, absolutely.
Right?
Yeah.
But where do you think, one of the things I've noticed finally just beginning to turn this year is that the later stage private investors are beginning to realize that when they bid up these very large, high valuations privately, that essentially if they have put a ratchet in for an IPO, it gets ratcheted back, which is actually a fairly significant loss for these guys.
Sure.
It's X years of 0% return with a necessary investment within an IPO framework. Are you guys also seeing that finally beginning the light dawn a little bit on this, or because I've seen it a little bit here and there, but it's still.
It's interesting. Not so much, and the perception out there is, the markets are getting tighter and things are getting difficult, and there's been some publicized, write-downs of startups by public funds recently. I think
Fidelity was the one you're referring to.
Fidelity, BlackRock, a couple others. I think that's a technicality, by the way. I think that's just an artifact of the way that their accounting systems work, as opposed to anything more meaningful than that. So there's a lot of talk about this. To your point, I haven't really seen that much reality yet. These, markets are psychological, and to the extent that this becomes the prevailing narrative in psychology, it's probably going to become a reality because it has become, the narrative at some point.
Yes.
But yeah, it's more narrative than present-day reality.
Yeah. No, exactly. Yeah. So let's talk a little bit about what are some of the interesting trends. And I'll kind of just walk through a couple of the specific ones, because I know that you have interest and thought in them, and then add the ones that I miss that you're particularly. But I'll do it kind of serially. So artificial intelligence, right? We have Elon, kind of worrying about the Terminator coming. He's not alone.
He's not alone
in that. And some discussion of that. We have a crop of, in the last 5 years, AI startups. What's your thought on the whole artificial intelligence and machine learning?
So I've long been curious about it, like many people in Silicon Valley, and long been optimistically skeptical about it, like many people in Silicon Valley. I don't think it's a black or white thing where AI doesn't work, then AI works. I think this is a gradual emergent phenomenon, like a lot of things. The thing that's most notable to me about the present state of AI and machine learning and deep learning, as neural network AI is now being called, it's rebranding of an old idea that's starting to work better, is
because of CPU cycles and amount of data.
Exactly, right, exactly. It's working better for a reason, because the technology and data is catching up to it. I'm not an expert on these things. I'm just a participant and observer. And what's most meaningful to me is that some of the smartest technologists, like real technologists who I know, who have been skeptical of these things for years, are saying, for the first time ever, I think this is starting to tip. And I think, what I've heard as the reasons why it is starting to tip is the ideas behind neural networks, which are not new, the ideas behind deep learning, which are not new, as Reid just alluded to, can start to work much better when computational processing speed and cost, just continue on the relentless Moore's Law march, combined with this explosion of data and ability to use that computational power to process that data, it seems to have tipped into something. And the thing I've been most excited about recently, I don't know if you saw this or if anybody here saw this, there's a researcher at Imperial College in London who recently developed a kind of deep learning system that could train itself by looking at chess games and chess moves to play chess at an international master level by using human-like neural techniques. So not by doing what the likes of Deep Blue do, which is to brute force process through every possible combination of moves, but rather to play chess the way a person plays chess, which is to look at abstractions and pattern recognition through training and learning. And it's not yet the best chess player in the world, but it can win at an international master level, which is really extraordinary. To me, is just really extraordinary. Chess is a very specific, and kind of search-based bound domain. So there's a long way from there to generalized, intelligence at a human level. But that, to me, is a big breakthrough. It's one example of a big breakthrough. So I absolutely think this is happening. What it means in terms of the areas where there's the most opportunity for commercial and social, applicability at a significant scale, I think is still kind of unclear. But absolutely excited about the trend, specifically because people who are much smarter about this stuff than I am are excited about the trend.
Yeah, my 2 cents, I actually think there's going to be a ton of progress in specialized artificial intelligence. It's still fairly unclear where the generalized artificial intelligence comes from, and there's several significant points of magic which will probably be solved, but are they a simple road from where we are? But then the interesting question comes down is how much of the specialized artificial intelligence stuff is startups, and how much of it's the major labs that are actually working on this, and it's still, it's very much
major industry, energy, defense, transportation systems.
Exactly. Biology and computation, genetics.
So I've been curious and fascinated by bioinformatics and genetics and genomics for a long time because on the surface, it looks something like software and information technology because it kind of is information technology. It's different in a couple ways, which I'll touch on. But I've been my partners and I have been playing around with this for a while. Haven't made any investments yet, but I'm playing around with it for a while. The thing that's got me excited about it right now is actually kind of similar to what we were just talking about with deep learning, which is not that I'm such an expert in this to be able to say, oh, like I can see what's happening here and it's real, but just the observation that many people from our collective ecosystem, by which I mean the software ecosystem, the internet ecosystem, have started to move into genomics, genetics, next generation sequencing, bioinformatics. Traditionally, that was sort of a different network of people who were in their own ecosystem. And to see our ecosystem moving into that world, to me, is a really bright signal that there's something going on here, that people who understand the sorts of patterns and playbooks that we all understand can actually start to, add value and have a point of view on those things. So that's the opportunity and the good news. The things that are still questions for me, and I think for my partners too, are two things. One is, it's kind of like information technology, but it's fuzzy. It's not, these are biological systems, and those are not cleanly resolvable to ones and zeros. And there's a lot of wet lab processing work that goes on in the genomics and biotech world, which is fuzzier than binary computing. Tried to resolve it to binary computing, but it doesn't work perfectly, and so that's one big issue. The second big issue is just the market reality. And the market reality of anything remotely close to touching healthcare in the United States is a disaster and a tragedy. And one of the things, as we talk about areas and markets that are interesting, another thing that I've been observing over the last few years is a lot of people from our world getting really excited about, I want to fix the healthcare system, I want to disrupt the healthcare system, I want to change the healthcare system. There is no worthier goal or cause in our world or in our country today than that, this country today than that. I know there are people watching from other countries too, and many other countries have this problem as well, by the way. The little I've learned and understand about that market basically says that it's wrong to call it a market, that it isn't actually a market. It operates by a set of rules which are foreign to anyone who works in commercial businesses, that the game is kind of rigged, and that the regulatory and incumbent environment is such that it makes it very hard for anyone to actually innovate on anything. And getting around that, unfortunately, I think is going to require more than just great product innovation and great software innovation and great execution. It's going to require a whole other level of kind of thoughtfulness and craftiness around how to navigate through those pathways to really change things. And so I don't want to discourage people from going into it. I do want to encourage people to have their eyes very much wide open and to go in and say, I don't know what I don't know, but I know that this ain't like that. And the things we all take for granted, the million things we take for granted in our world, don't apply there. I think a lot of those same statements are true about everything around bioinformatics and genomics and all the genetic technology. Enormous potential, enormously exciting, actually very challenging to address from a market perspective as an entrepreneur who thinks about markets.
Two things. Last week I was in Beijing, and Joey Ito and I did an event for LinkedIn China, because part of what we do is these offline speakers events to help the Chinese tech community understand why being part of a global market, global network is actually in fact useful to them. And so his whole thing for the Media Lab these days is biology is the new digital. Right, so there's this whole kind of intersection of that. And then related, one of the things that I think in biology that is probably one of the most oh, you hadn't quite expected that coming out of this is, given you can do genetic profiles, there's all of this work going on. Let's take all of these drugs that had some positive things that we really liked, but had unacceptable consequences, like it killed 1 out of every 100 people, right? Because it's unacceptable for a drug to do that. Well, if we could genetically figure out how to identify that one person, could we get the benefit for the other 99? And that's the kind of thing you're beginning to see in informatics going into biology that I think is super interesting.
Super interesting.
So I have a bunch of questions. I'm going to ask one more, but this is also, if folks here are interested in asking questions, there's a mic there, you can line up. And I will keep going, but if people line up, I will stop to take questions, and we have about 15 minutes. So while people can think about what questions they may or may want to ask, I'm simply going to do, just to get a full kind of portrait of you, there's a bunch more tech stuff. Was going to be, did jazz musician, has a strong interest in culture. What are your comments on kind of culture in Silicon Valley? Both what is it today and what might it be?
So I actually grew up in New York City and lived in New York City for the first 18 years of my life. Most of my family is there. I've had the very good fortune to live in places like Beijing. I worked at a startup in Beijing, temporarily dropped out of college and did that in the 90s. Have lived in Amsterdam, was trying to make it as a musician in Europe for a little while, once upon a time, many years ago. So I've lived a lot of my life in and around some of the major urban environments in the world. I spent a lot of time in Paris, too, at one point in my life. And when you travel around the world, the people who are outsiders to our ecosystem here in places like Beijing or London or Paris or New York, this thing you hear over and over again is Silicon Valley has no culture. Like you hear that all the time. At least I hear that all the time. And I think that's profoundly and specifically wrong, which is that Silicon Valley has an unbelievably strong, deep monoculture. And that monoculture is everything around technology innovation, startups, the internet, software, to some extent hardware, biotech, et cetera. That's sort of what the defining attributes of Silicon Valley and the Bay Area are. There's lots of other interesting stuff going on here. Of course, I don't mean to denigrate anybody else's work here. There's loads of interesting things happening here that aren't about technology, but by and large, that's what this place is about. And by the way, this is the place that's about that. There's lots of other places in the world that have startup hubs, but at the end of the day, if you want to make startups into big technology companies, you go to Silicon Valley. If you want to make movies, if you want to be in the movie business, you go to Hollywood. You can make a movie anywhere. If you want to be in the movie business, you go to Hollywood. You can make a startup anywhere. If you want to be where the game is, you go to Silicon Valley. That's a very specific, deep culture. It's expressed in specific things that this culture values, that this culture looks down upon, the way this culture rewards people, the way compensation works and doesn't work in this culture, loads of things. That's good news and bad news. I think, ultimately, because technology is so important, probably the most important thing for the 21st century, the Bay Area, Silicon Valley, San Francisco are destined to be one of the most important places in the world in this century. I don't think anybody would dispute that. That being said, it still isn't a place which has the breadth and diversity of culture that you would find in a place like New York or Beijing or London or Paris or Tokyo, the other places in the world that people think of as the absolute most important epicenters of humanity on this planet. And I think we all have something of a responsibility to address that and have a long way to go. But given the creativity that exists in this community, we have the ability to do it. And I'm talking about all the other aspects that go into building a great culture. Because ultimately, anything that's a monoculture, even as one as powerful and deep and specific as this, it's a little bit fragile, and it doesn't have the durability and strength that a broader ecosystem or a network of networks would have. One of the many things I learned from Reed is the importance of networks for your own career and for your life. And the network in Silicon Valley is unrivaled as a network, but it isn't really yet a network of networks. Technology is going to be the strongest network in the Bay Area, but we need other things too to make this a truly global epicenter for all of humanity. And we've got work to do there on all the other aspects of culture.
Hi, Matt. Thanks for joining us.
Sure.
My name's Jackson, and you mentioned how biotech is a very popular and increasingly meaningful segment in the startup world, and how Benchmark has not yet participated in funding a biotech company. Given recent allegations and revelations against Theranos, and especially their $9 billion valuation, do you think that's going to put a damper on how VCs approach biotech funding in the future? And do you think there's any merit behind what the FDA alleges against Theranos?
So I'm not close enough to the Theranos situation to know whether there is or isn't merit to the specifics of what the FDA is alleging. I don't even know the specifics of what the FDA is alleging. I know there's been controversy and drama around it. I think when something like that happens, when a narrative like that happens, I think it does have some psychological impact on the investor community more broadly. And it sort of speaks to this thing that I was talking about earlier around pricing everything to perfection and assuming that there's no risk. And when stories like that come up, whether they're totally right, totally wrong, or as is usually the case, somewhere in between, I think it causes people to say, oh, wait a minute, maybe things have a little more risk, than we thought, and maybe we need to factor that into our thinking. I don't know that that's specific to the biotech industry per se. I don't know that Benchmark would go after the biotech market as much as the kind of genomics and genetics market, because broader biotech is even further away from what we all in this room and probably watching this elsewhere understand around software. And that's just almost a completely different market. But when stories like this hit the global mainstream media, I do think it affects investor consciousness, absolutely.
All right, thank you.
Sure.
Hi, Matt. I'm Jason Schizzle. I do data science here at LinkedIn, and I hate to keep harping on the biotech, but it's a very interesting point that you guys brought up. I'm wondering, at what point do regulations become such a barrier, but the opportunity is large enough that the money goes elsewhere, maybe where there's less regulation? And also on this same topic, the idea of privacy as a barrier. I think legislation tries to do a lot to not necessarily restrict, but ensure safety in these cases. And I wonder at what point do the entrepreneurs go around the legislation instead of trying to go through it?
Trying to go around legislation only works if you're extremely specifically skilled at navigating things in the right way that'll both make you successful and leave you on the right side of ethics, morality, and the law. And that's a very hard thing to do. The regulations that exist around everything in medicine are so challenging to innovate through that I don't even know where to begin. Doctors, my observation is that doctors are specifically indoctrinated into a culture where they don't think about the price of things at all, ever. Just as one example, they don't know. I'll bet that your doctor doesn't know how much this thing costs versus how much that thing costs. And you don't know either. Somebody knows, but it's a very opaque, Byzantine, inefficient way of getting to the truth. And so it's just one example. In terms of where the capital goes, I think there's capital that goes there, there's capital that goes elsewhere. I think by and large, one thing that you'll hear from pretty much everybody who thinks about the investment side of things right now is there's too much capital. I actually think that's a little bit a little bit of a throwaway, because there's always too much capital. Capital is always more abundant than great ideas and great opportunities. Sometimes it's much more so, sometimes it's a little bit more so. I think a lot of thoughtful money is worried about investing in areas that have really hard to navigate legal and regulatory constraints in place, which is part of the challenge.
Hi, I'm Martin, and I work here at the Help Center, LinkedIn. And I'm very passionate about the sharing economy and startups. And as both of you know very well, recently there's been a lot of turmoil regarding how it impacts the labor markets. Like, for instance, I know people who work at Lyft, Uber, and then they do some TaskRabbit on the side. So they're not employees of any of the companies. So you know where I'm going. So without, I know that you don't have a crystal ball, but what are your thoughts of how this sharing economy is going to impact the labor markets?
After you.
Okay. I'm interviewing you. Let's see. So the short answer is I think the way through, just like any kind of new productivity, whether it's a move from agriculture to industrial age and the kind of manufacturing, there's a bunch of turmoil as you do the transition, and then you have to figure out what the new rules and guide rails are. So for example, one of the things I was talking to a couple of my friends about a couple months ago, we actually haven't had this conversation yet, is what would a network labor union look like?
Yep.
Right? Like, what would you reinvent it in that basis? And part of the thing that you have to do that we're trying to do in society is say, look, how do we conjointly get massive investment in the future by which you have economic opportunity for individuals and companies and investors and entrepreneurs, and you have guide rails by which the majority of people can reliably live good lives, right? And you have to solve both of those problems, and they're both really important. Yep. Because if you don't solve the economic problem, you don't have the economics in order to get people to have good lives. So you have to conjointly solve those problems. Yep. And I think that what you see here is kind of the classic. It's like when a factory is invented, there were a bunch of stuff that didn't quite work, right? You had to invent child labor laws. You had to, there was a bunch of stuff let's do it this way or this way, because this is not so good. And so I think that we're still working that out. For example, questions about how do benefits and healthcare work, right? And those kinds of things matter. Now, I also agree with your thing is one of the posts that I've been thinking about writing on LinkedIn is everything has a cost, because part of the whole problem in medicine is look, some of these things are worth doing and some of these things are not worth doing. And actually it's fact, because there's an ROI on each of these things, and it doesn't mean that, that you shouldn't invest and try to change the cost curve. So those are kind of some general high lines. The other thing I would say, and actually I'm going to speak a little bit about this, at a friend of mine, Tim O'Reilly, is doing a conference in San Francisco tomorrow morning, and I think I'm doing the opening thing with Zoe Barrett, and we're going to talk a little bit about, look, when you have these transitions, it puts pressure on middle classes, it puts pressure on other things, and what kinds of things do you need to do? And one of the ways that the question is frequently formulated is, what's the reliable jobs that humans will always be doing as opposed to machines? And the question is, it's a dynamic system. Yep. So it's always shifting. And so you're not forever. What you're doing is okay, how do you create that transition? And actually one of the things I think has become even more important in the networked age is how do we support entrepreneurship? Because the entrepreneurship invents the jobs that people shift to. And then we as a society need to help them be able to get to them. Is it retraining, what we're doing here with LinkedIn and Linda and everything else? Is it other things? What are the things that enable that? And that's important from both a social point of view and a corporate point of view. That's how I would.
Yeah, these are, the companies represented by this idea of the sharing economy speak to this enormously empowering and enabling thing for people. Which is the ability to have autonomy and the ability to be self-directed in your work and in your career, and to dial that up and dial that down, and to live a life that again empowers you as an individual, regardless of what part of the market you're in. I think that's happened more than anything because of smartphones. And people now have a supercomputer in their pocket connected to the internet, and all of the information, with location, with them, on them all the time. And I think that's the most radically transformative thing that's happened since the internet was created itself. I think the ultimate impact of it is larger than the internet. I have this idea. I like to think about smartphones as a remote control for real life. I always harp on this because I think it speaks to sort of what the magical experiences are of using this thing. But the key thing is that everyone has it. So we're all part of this network now. Everyone, practically everyone in the developed and developing world has access to some form of a smartphone with internet access pretty much all the time. And the old theories of why companies were formed in the first place was that it was too difficult and expensive to get people to coordinate and conduct economic activity and share information without having it all kind of in one body, because the search and discovery and communication and transaction costs were still high. Well, I think there's lots of other good reasons to have companies, and companies are going to thrive and endure, but a lot of those original problems that old economists talked about 100 plus years ago are gone now, thanks to the smartphone. And so it is an enormously empowering and enabling thing for everyone. As Reed spoke to, it's critically important that we build the right sort of social foundation to make sure that everyone, is able to lead a good and increasingly good life. And I'm confident of two things. I'm confident that we need to figure those things out as a society, and I'm confident that they're going to look different from the way that they looked in the 20th century, because the ideas and the models that worked in the 20th century, to your point, don't work anymore. They clearly don't work anymore. And so reacting to what's going on by saying we need to bolt on the old system on top of this, that's never been the right answer. It's not going to be the right answer this time.
Last question.
Yeah, it's actually my name is Vicente. It's kind of a follow-up on the previous question. I think it's my general experience with things like Uber, for example, is what you just said, which is people that drive full time, and I always talk to the drivers, like they seem to be more on the downside of things, whereas people that drive on the part-time, they're always very optimistic and they're very happy about the opportunity, right? So my question is, as more and more people kind of start to do these types of jobs, and with the progress of AI, with especially on self-driving happening so fast, are we going to run out of time as we kind of shift all these people to things like driving, and then eventually that starts to be taken back through the automation?
These are platforms for entrepreneurship at the end of the day, and for growth. And so how that exactly gets channeled, will change and adapt over time. And there's a lot of talk, about certain technologies right now, like self-driving cars. These systems still work in that environment. It's still a platform for small business, autonomous small business entrepreneurship. We all focus here in Silicon Valley on the sort of entrepreneurship that leads to really big business if it's successful, and that's super important. But small business owners are still the lifeblood of any thriving market economy. And ultimately, these things are platforms that enable much more of that to happen. And there's lots of stuff that needs to get experimented with and tweaked, and will be gotten wrong and then gotten right and changed over time. But ultimately, this whole movement driven by smartphones just speaks to the extent to which society and the economy are being grown and reshaped and transformed and made better through these new technologies.
And with that, let's thank Matt for spending an hour with us.
Reed.
Thank you. Thanks again for coming back to LinkedIn and sharing all your insight. And thanks, Reed, once again for hosting another great session. Thanks to all of you for coming. In the spirit of always, trying to continue to improve our program, when I'll send out the recording to this that will be on YouTube. I'll also send out the recording that will be on a podcast. There'll also be a survey, and I'd really encourage you to take that so we can continue to bring great programs to you. And one new thing we're doing to collect that kind of information too is on your way out, we have one of those happy or not machines. So just click the smiley face that resonates mostly with you. But again, another warm round of applause for our guests today. Thank you.